are in the QBO gym, and the QBO gym is a place where we have numerous hands-on exercises that simulate real-life scenarios that you may encounter as a bookkeeper. Each month covers a variety of new topics and scenarios, and to make it a little bit easier for you, we break it down into 4 different sections. So if you are looking to work on your bookkeeping skills, this is the place for you. And if you want to do a deep dive and do some of these on your own, be sure to join our free 5-day bookkeeping challenge. All you need to do is click on the link in the description. But let's get into today's exercise, which is being pulled from our May Year 1 Strength Training section, where we really focus on those journal entries. At the top here is an animated video to give you a synopsis of what is going on in Craig's world this month. He is our fictitious business owner. Below that is an interactive pre-assessment quiz that relates to the video up above. Underneath that are all of the exercises in this section. And at the bottom here, after you have gone through all of the exercises in this section, you will unlock some sample marketing posts that you can use on your LinkedIn to share with everybody what you have learned so far. So let's dive into today's exercise, where we're going to practice using a journal entry to record a sales summary. Go ahead and click on that link to open up the exercise. I have it over here on the right side of my screen, so let's read through our scenario. Now that you've practiced journal entries, let's revisit a scenario, or the scenario you went through in the warm-ups section. See below for the full recap. Now, before we go through that recap, be sure that you are in the sample company, as you will need it for this exercise. If you are not sure how to get into the sample company or get your own free QBOA account, be sure to click on the link in the description. I have the sample company pulled up here on the left side of my screen. Once you sign in, this is what it will look like. This is the dashboard. So let's read through that full recap. If you remember the scenario from the warm-ups section, Craig sold some plants at a local farmer's market and collected the money using a point of sale or POS system called Slice. Since it doesn't integrate with QBO, he provided you with a sales summary for last month, and you'll have to enter that data. Now, in the warm-ups, we entered this as a sales receipt. Using a sales receipt meant that we had to create each item on the sales summary as a product of in the products and services list. Each of those products fed into an account. The cash check sales fed into sales of product income, as did the credit card sales. We also created a product that fed into commissions and fees. This is what we used for the fees slice charges. By using a journal entry, we can feed directly into the accounts without having to create these quote unquote products first. So let's see how we would do that and get started with the exercise. First, we need to click on the link underneath the animated video in this section to grab the sales summary again. So if you go back to the gym here and you scroll up to the top where that animated video is located, underneath that is a button that says Sales Summary. Go ahead and click on that button to have it downloaded. Once you do, go ahead and open it up, and this is what it will look like. This is that sales summary, which if you did the warm-up section should look very familiar because it is the exact same summary. So let's go ahead and create that journal entry. We're going to click on the plus new button and then select journal entry. So if I go back to this sample company, the plus new button is on the top left corner of the screen. Click on that, and then under other, select journal entry. Once it comes up, we're going to go ahead and start filling it out. In the journal date field, we're going to select the last day of last month. So for me, that would be April 30th. Your date may be different depending on when you are doing this exercise, and that's totally fine. Just make sure that you are selecting the last day of last month. In the journal number field, we're going to type the year, month, and slice sales. So if I delete what is currently there, I'm going to type in 2024. It's the current one, so 05 slice sales. Let me make sure I did that correctly. No, I'm sorry. It is actually going to be 4. So it should match the month that is here in the journal date. So for me, that is 2024-04 slice sales. Next, we're going to account for the money that came in. So on the first line in the account field, we're going to select sales of product income. So go ahead and click into that. You can click the down arrow and you can start scrolling, or you can go ahead and do what I'm doing and just start typing in sales of for sales of product income. Once you find that income account, go ahead and select it. In the credits field, we're going to type 750, and that is because the total sales that are showing right here is $750. So click into that credits field, go ahead, type 750. In the description field, let's go ahead and give it a little more information. We'll type total sales. So click into that description field, go ahead and type total sales. Now on the second line in the account field, let's select undeposited funds. Go ahead and click into it. You can click the down arrow and start to scroll, or you can go ahead and do what I'm doing and start typing in undeposited funds. There it is. It is an other current asset account. Once you find it, go ahead and click on it. Now, QBO will automatically fill in the debits field to match what is here in the credits field or credits column, and that's because debits and credits must always equal each other. But we can edit this to match what is on the sales summary. So we're in the debits field, we're going to type 625, and that is because that is how much cash was collected. That's 625, which would be in the undeposited funds because that is the holding account until it makes its way physically to the bank. So in the debits field, type 625. In the description field, we're going to change it so it says cash receipts. So delete what is currently there. It automatically, QBO automatically pulls down the description from that line above to have, assuming that that's what it wants to be filled in for, but we're going to change that to cash receipts. So delete what is currently there and then go ahead and type cash receipts. In the next few steps, we will be adding the slice clearing account. If you are in the same session of the sample company as the warm-ups, you don't need to recreate this account and you can skip down to step 14. You would just select it on the third line in the account field and then, skip down to step 14. But if you are in a brand new session of the sample company like I am, we're going to continue on as the exercise is written. So on the third line in the account field, we're going to type slice clearing account and then click on plus add new slice clearing account. So click into that, go ahead and type slice clearing account. Then go ahead and click on plus add new. This clearing account is going to be set up like a bank account, so we're going to leave that account type as is. In the detail, or excuse me, detail type field, we're going to select checking. So click into that. And again, this is not a real checking account, but it's just how it gets set up here for that clearing account. Now, because we typed in that field, that account field, slice clearing account, the name field it already has what it is that we want for this account, slice clearing account. So that is all good to go. We're going to leave everything else as is and just click on the green save and close button. And now that is showing right there. And after selecting the account, QBO automatically assumes that the amount in the debit field should be $125 since 125 plus 625 equals 750. Remember, debits and credits always equal each other. This matches the credit card receipts on the sales summary, so this can be left as is. If I go back to the sales summary, you will see the card. There were $125 worth of sales collected on cards. That is why we have that clearing account. It is for those credit card sales. 125, everything is matching up here. We're going to, in the description field, type CC receipts so that we can indicate this is for the credit card receipts. So go ahead and update that to say CC receipts. Now, finally, we have to account for the fees. That is that $1.88 in fees. The money goes into an expense account and out of that clearing account because the fees are because they are for the credit card sales. Those credit cards incur a fee from Slice, and so that is why it is coming out of that clearing account. So on the fourth line in the account field, we're going to select commissions and fees. Go ahead and click into it. You can start typing like I am, or you can search for it, that expense account. Once you find it, go ahead and click on it. In the debits field, we're going to type $1.88. So click into it, type $1.88. And then in the description field, we're going to update it to say slice merchant fees. So click into that, go ahead and type slice merchant fees. And now let's go ahead and get that added into, or the, pulled from the slice clearing account. So on the fifth line in that account field, we're going to select slice clearing account once again. So click that down arrow. It's towards the top of the list. Go ahead and click on it. The credits are automatically going to populate to equal everything that is in the debits field. You can see it right there. So we're going to leave this as is. And then in the description field, we want to type reduction from clearing. So let's click into this and then type reduction from clearing. And there we go. So don't get confused by the total of the journal entry. The great thing about journal entries is that you can accomplish several things at once. In this journal entry, you are recording two separate events. The fact that Craig sold $750 worth of stuff, and the fact that Craig had to pay a $1.88 fee. So each of these on their own are balanced on the journal entry, but because two events are recorded at once, the journal entry reflects the total of both of those. So just know that that's why you're seeing a difference here. The way it here shows on the sales summary, why that is showing differently here on the journal entry. So we are all done here. Let's go ahead and click on the down arrow next to Save and New and then select Save and Close. I have the Save and Close is already right here. If you need to click that down arrow to get Save and Close, go ahead and do that. But click on the green Save and Close button. And now that journal entry has been saved. You can see it right there. Now, a final note here. So now that you know how to do it both ways, which one is better, whether you use that sales receipt or the journal entry? It really honestly just depends on how comfortable you and or your client are with journal entries. As a general rule, it's best not to use journal entries if you can avoid it. Using the built-in QBO transactions ensures that everything is categorized correctly and in the right place. And damage is easily undone if you make a mistake. This is perhaps the reason Intuit requires you to know the sales receipt method for the advanced level certification tests. Now, if, however, you are very familiar with journal entries and the debits and credits required to use them, the process, as you can see, is far simpler and requires much less steps. So ultimately, it's a matter of how you, your client, and possibly your client's accountant want to handle it. Sometimes it's just a matter of continuing what they are already doing. But whichever way you choose, you have got this. And that is how you would record sales summary journal entries and just an overview of journal entries in general. Now, if you like this exercise and you'd like to do more like it, be sure to join our free 5-day bookkeeping challenge. All you need to do is click on the link in the description. We have finished the strength training section and we move on to the cool down section with our next exercise where we practice reconciling the checking accounts. And I will see you in the next video.